Hello, and welcome to Monumental, where we sit down with entrepreneurs, leaders, visionaries, and big thinkers making monumental change. Here's your host, Evan Holiday.
Welcome to Monumental. I'm your host, Evan Holiday, and today we have on the show with us a special guest, Jens Nielsen. Jens, how are you doing?
I'm doing well, Evan. How are you?
Great. Very glad to have you on the show. A little bit about Jens before we get started. Jens is the principal of Open Doors Capital. He's raised almost $1 million for apartment deals and has invested over 800 apartment units, 500 mobile home park lots, and over 4,500 storage units, plus mortgage note funds and private money lending. Jens has strong experience in evaluating deals, assembling a team, renovating and operating the properties. And before that, he even had a long career in IT. And Jens, you're originally from Denmark. Is that right?
That's correct. Yeah, hence the name and the accent.
I love it. Well, Jens, thank you so much for coming on the show. Let's just dive right into a little bit of your background and how you got to where you are today.
Yeah, I appreciate it. So, did follow the traditional path of getting an education and getting a job and doing what you're supposed to do, like work in the corporate world and save money and do 401k and then hopefully one day be able to retire. And it wasn't until kind of later in life, that I realized that path may not be the best in terms of reaching financial freedom and having that financial abundance. So 4 or 5 years ago, I kind of discovered real estate, and that's to be the way to create some of that wealth and some of that, passive income and just kind of directing my own future versus relying on somebody else to give me a job. And that was just that click or that shift I had, and that really changed my life, my trajectory here that 4 or 5 years ago. And it's been an amazing journey ever since.
I love it. So what was the turning point for you? What got you onto real estate, and then what also got you hooked on real estate?
Yeah, so over the years, I had been thinking about various ways to create some different income streams and stuff, but everything just looked like another job. I could go and be an IT consultant, I could do this, but it was always a job. I was like, well, that doesn't really free me up. And I literally remember I listened to audible books, and I picked up, I think it was like The Bigger Pockets, How to Invest in Real Estate, or something like that. I picked it up and started listening to that. It's like, oh my God, this is the thing. I just had this light bulb go off. I know a lot of people say, well, Rich Dad Poor Dad is the first book, but it wasn't that for me. And then I just got totally hooked on it. I listened to a bunch of books and podcasts and everything else. And I was like, man, this is the way to do it. And I then quickly figured out, okay, once I make a decision, I usually just take action. So I reached out to a friend in the community who owns a bunch of apartments and mobile home parks. And I said, hey, how do I do this? What do I need to do to get started? And he just kind of said, well, it's pretty straightforward. You just figure out what the expense is, what the expenses are, what the income is, and then you make sure that there's a profit at the end of the year. And I was like, oh, that actually makes sense. And he connected me with a broker, and who has since become my mentor. And we just kind of got started with, for a couple of fourplexes, and then grew from there.
So I love that you said you're like, I just figured it out that I want to do this, and I'm taking action on it, and I'm making it happen. What advice would you have for our listeners that are, either multifamily investing or starting a business or whatever it is in their journey of, wanting to start something, but not necessarily taking that action? What for you has worked?
Yeah, get some education first, right? At least learn as much as you learn something about the business from whatever, reading or listen to podcasts, getting a coach, going to conferences, whatever it may be, right? So learn something there. But then also, if you have some capital, I think take that action. Just go and say, okay, well, let me learn how to analyze a property, and let me buy the first smaller deal and then see how it works out. That's one path. It's a slow path, but I think it's also one where you can learn without potentially losing other people's money or getting into too much trouble, right? But I also think you need to scale quickly, because otherwise I see other investors, they buy a single family house, like, well, that's $200 a month. That's not going to change my life. So
Yeah.
you kind of have to really scale quickly and kind of begin with the end in mind and say, okay, I want to, be financially free in 5 or 10 years, and then see what is that number you need to be at. And that my wife and I sat down early on and we thought, okay, if we buy a fourplex a year for 10 years, we'll have 40 units. That will get us pretty far down the road. And that very quickly realized, that's too slow. We got to really ramp it up. So just taking action and getting somebody to hold you accountable is really one of the things that's super important.
Yeah. Yeah, I agree with that. Accountability, it starts with education. I mean, you can't do anything if you're not educated on what the steps are and how to take successful in the right action. And then, accountability and, oh shoot, there was something else you mentioned that I really liked. But I think it just exactly what you're saying is it comes down to taking action and having that mindset of saying, hey, I won't ever move the needle towards my financial freedom goal unless I take that action. And what I wanted to point out was you mentioned getting clear on that number, whatever number that is. I think that's powerful. And it's, I've talked with my coaching clients a lot of times when I first talk to them, they've never even thought of that number. They just say they want to be financially free. They want to own their business, but they haven't actually spent 30 minutes or an hour to figure out what their expenses they want to have in life, what they don't want to have in life, and figure out what that costs, that lifestyle, and plan accordingly.
Yeah. I hear a lot of people say, I want to make $1 million or whatever it is. Like, well, you probably don't need $1 million to live your lifestyle, right? And me and my wife did the same thing. We just basically looked at, whatever software we use for this. And we said, okay, here's kind of like our average expenditure every month. It's like, that's our freedom number. And that's a lot less than what we actually make, right? So if we can just get to that, we don't have to work. We don't have to do the W-2 grind every day. And I think that's a super important starting point, right?
Yeah, I completely agree. And then that unlocks your time and your energy and your mind space to be able to go out and make the monumental impact or whether it's buy more units or see the world or help others, it just frees up your time and your headspace and gives you the power and control.
Exactly.
I love it. So walk me through, after you were able to get your first deal, what was next?
Yeah, so started with a couple of fourplexes in a couple of months, and then I actually, my mentor and broker, and this is mainly, we started in Albuquerque, New Mexico. That's kind of the closest bigger city where I live. And I was like, okay, what can we do next? And he found me. That was kind of the first creative deal. He found me this 11-unit deal that needed some work, and we went in on that, got seller financing on there, and were able to have like no payments for 10 months. We essentially got 10 months worth of cash flow to go back and rehab the property. It's kind of a little bit of a rundown deal, but we were able to get that money and then just put it back into the property and really start improving it. And that was kind of my first taste of the value add strategy, right? Get something that's run down or whatever it is, you put some money into it, you improve it, and you make a nice home for people and still at an affordable price. So that was kind of our goal there. So that was next. And then I was like, okay, now I'm out of my own capital. What do I do? So we found, again, with that same partner, we found a 38 unit also down there in Albuquerque, and we bought that with a couple of JV partners. And again, kind of pretty rundown property, undercapitalized, and we were able to get it at a good deal. We're 2 years into it, and we're finally kind of done with the renovations. It was a lot bigger project than we initially had anticipated. When you start opening the walls, you never know what you're going to find.
Yeah.
So, but it's stabilizing now, so that was pretty cool. So that was kind of like the initial getting partners in and seeing what it looks like to manage this. Not a big deal, but it's something slightly bigger and beyond my own capability, right?
And that's amazing. I love how you basically like 3x your unit count on your next deal. That's another thing to keep in mind is, it's like this, I think Michael Blanc has said this, it's like you can take, if you double your units every time, you're going to be doing 100+ unit deals in no time.
Right. Yeah. And Yeah, it's true, because I realized, smaller deals are just, they don't scale well, and they're too unpredictable in cash flows. I quickly realized that was probably not the way forward. So that's why we went bigger that way.
I like it. So you JV'd with someone on that one, and then afterward, I mean, you've done, based on your bio, you've done quite a bit more than that. So
Yeah.
What was
to kind of continue the story, right? So then I realized, okay, now I've done a few deals. I'm still not. I'd heard about a syndication more. I had no clue what, how to put something together. I did invest in some passively, just to, put my money in with somebody else and just see how that would work out.
Yeah.
But then I realized, hey, I want to do, syndication seemed like that's a direction a lot of people want to go in, because you can use other people's money and there's no limit to how many deals you can do, right? But I realized I didn't have a network that I could achieve that with. So I decided to join, a coaching program with a mentor, and started going to events and really started connecting with people that are doing the things I want to do, right? That thing about the 5 people you hang around with is going to determine your net worth and all that stuff. And I, pulled myself out behind my computer, because I've been in IT for so many years. I'm mostly comfortable sitting behind a computer, looking at data and spreadsheets, but really becoming that person that can go out and just talk to people and create those relationships. And I really actually embraced that, and started going to events and connecting with people, And then that led me to the opportunity to partner on my first syndication, which was February, I think, of 2019, the 216 units in Atlanta, Georgia. Came in there and helped that team with some underwriting, due diligence, raising capital, investor relations, and all that, and then kind of got my feet wet, I guess, in a larger deal. And that was super exciting to see how that's run and learn from that experience, right? So that was the first deal, the first larger deal, and then we actually ended up doing another 200 plus units in Western Pennsylvania. Found a gentleman there that I've now partnered with, and we did another 236 units in Phoenix. So that was all of last year. That's 650 units, whatever that comes up to, in that year span, right? And that was super. I mean, that's really just showing, like, suddenly, once you set those bigger goals and take action, there's a lot of things you can achieve. So that was super cool to achieve.
Yeah, I love that. I love that story. I mean, you went from 11 to 38 to 600.
Yeah.
That's a massive hockey stick curve right there. I love that. So looking back, having completed 600 plus units of acquisitions last year, what would you tell yourself, Jens, starting off in multifamily investing, what would you tell yourself?
Everybody says go bigger, quicker, and stuff like that. I don't regret the path by any means, the way I did it, because I do still like to have properties that I own by myself, because I don't have a responsibility to investors. I don't need to sell it in 5 or 7 years, and I can kind of make my own decisions on it. So I bought a few more properties by myself, just hey, I want to hang on to this and keep it for a while. The advice is really probably, surround yourself with people that you aspire to become as soon as possible, right? And really think about, again, start with the end in mind, right? If you want to syndicate, well, figure out where the syndicators hang out and start going and meeting them, right? And that's, typically events. It's typically, meetups. Right now we can't really go to physical meetups, but at least we can do virtual events and other things. And there's so many ways we can connect with people. And I think that's just been the biggest. And then try to add value too. That's the other thing I've found. Like, so I saw these people that I aspired to be like or be similar to. So I said, well, let me start a mastermind. I'll set it all up. All I wanted is you guys to come on and help, kind of add some value there. And by doing that, that was actually one of my first partnerships came from that by setting something up that other people found value in, and then they saw I could take action and help them with those deals. So
that's really cool.
But I think a lot of new investors or somebody one day, well, how can I add value to somebody? And that was one way I found, but just by running that. And I'm still doing it every once a month we meet. And they're more my peers now than so that's pretty awesome. Right?
Yeah, that's a great idea. So you basically set up, was it virtual or in-person mastermind?
Virtual, just on Zoom because I'm in a small town and people all over the country, right? So yeah.
That's really cool. So you, just to give our listeners some ideas of like how they could do the same thing. So you set up a monthly virtual Zoom mastermind with other multifamily syndicators, and basically it was like, hey, I'll set it up, I'll run it, I'll coordinate it, I'll facilitate a value for everybody else. And in return, you ended up making some great connections and learning from some great people that's a great way to do it.
Yeah, that's worked out because I realized again, being in a small town, I couldn't go to meetups and meet these people, and traveling, there's a limit to how much we can travel. So I felt that really worked out, and you're right. And then I also the other value I added was that, other people that wanted to associate with each other, they got brought together kind of through my idea there. So that helped, right? So we got people in LA, we got people in Boston, we have people in the Midwest. So, and it's really cool because it's just synergy and we're growing together, we're learning, we're sharing. So that's been pretty awesome. That's
amazing. So what is next for Open Doors Capital and Jens?
Yeah, so I still have a W-2 job. I am actually going to go to part-time here in a couple of months. I told my boss that, hey, I've been working from home now. Now I can actually continue to work from home at a lower, reduced hours. That's next. We are in the middle of another deal that we had started. We got under contract in February, and then, the world changed. We're still closing that here, I think, in a couple of weeks. So that's another 127 units. Syndication. And surprisingly, I thought, oh man, it's going to be really difficult to raise money now, but people still want to invest in real estate. They still realize the value of long-term investment in that asset class. So the money raising wasn't a big deal. Then I think right now, I mean, I definitely, we want to still continue to syndicate. I want to just wait a minute to see where this plays out with our current COVID situation and not go in and overpay for an asset.
Yeah.
Like yourself, I do some coaching and other things to really help pay it forward and help new investors to get the confidence to take action and become better investors. So it's a combination of those things, right? Just syndicate some more deals and just keep growing the portfolio.
I love it. And then tell us a little bit about what you were mentioning right before we jumped on. You and your wife are going to be traveling for a little bit.
That's right. Yeah. So, we live here in southwestern Colorado, and it's a small town, and we're like, oh, let's go out and explore other parts of the world. So, the country at least. We both have remote jobs. So, and we've learned here the last 2 months that we actually can work together in the same house. So we're like, and we are, I'm a real estate investor, but I'm renting. I've been renting for the last couple of years because my capital is all tied up in multifamily. So
same here.
So that's funny, right? There's assets and liabilities. So I guess
exactly.
So we're decided here. I think it's August 1. We are going to go to Santa Fe, New Mexico for 3 months, just renting a furnished house there, taking our dogs and our computers and just working out at that place for a while. And then we may follow it south through the winter to maybe Arizona or, some other places. And then doing that for a while and just check out a few places without being too tied to one location. And just, places that we like to visit, we'll see what it's like to live there for a few months, right? Just checking it out. So
that's really cool. Exciting. Yeah, I wanted to bring that up because I think that's a one freedom that you gain when you can be a remote multifamily real estate investor. It gives you the freedoms to do adventurous things like that those with a W-2 may not be able to do regularly.
Yeah. And, we set up systems and have managers in place. So I'm not on site managing any of my deals, right? I can do it remotely. And that I never really felt like the hands-on management was something for me. I mean, we do have a small mobile home park, me and a partner managing, but we've also actually gotten people to do most of the work there. So it's, don't be in the business, be on the business, right?
Yeah.
On the business. So that's I didn't know what that meant until I was like, oh, I'm here rehabbing mobile homes. No, thank you. Let me get somebody else to do that for me. So.
Yeah. So let's dive into that real quick. So what advice would you have for setting up systems and being able to be more remote and kind of not being on the property every day?
Yeah, I mean, I started out investing out of state, so I pretty much had to hire a property manager day one, right? So I relied on their systems to operate the property. And I think the biggest thing I learned there, you still need to manage the manager, because, you're just one customer. So just stay on top of what's going on and manage them. I just have a system around reviewing the monthly statements to make sure the income and the expenses make sense. So I spend an hour or two every month doing that, and then, my acquisitions and stuff like that, just kind of getting using a system, getting a deal flow in, analyzing it, and then seeing if there's something we want to move on with or not. And so we have, don't spend a bunch of time. But I think really the biggest progress we made here was, because we're partnering on this latest deal, and I'm remote and those guys are on site. And we pretty much came up with a full checklist to what are all the steps that need to be done from finding a deal to closing it and do management and stuff like that. And just really saying, well, here are all the steps, who are going to do what, and just understanding what everybody's responsibilities are in a larger deal, so we don't leave out important steps. So that's where my kind of logical IT mind comes in, right? And using, Asana and Slack and, just cloud storage and all those things, so we can work remotely, independently. That's been really important to do that.
Yeah. I'm glad you touched on creating a checklist for deals, and also making sure to be clear, if you are partnering with others, on your roles, responsibilities, structure, who's handling what. You don't want balls to be dropped after you close on a deal, or even in the process of closing on a deal.
Yeah.
Because it works out better if everybody's on the same page from the beginning. And then if a problem arises, then you have that already sorted out, instead of having to do it after the fact.
Yeah. I think the most influential book I read on that was The E-Myth by Michael Gerber. It's a great book to kind of just, it's not about people, it is about people, but also the systems, and the systems are just as important. So you can, plug somebody else in case somebody leaves, and you don't rely on individual personalities to get stuff done. So.
Yeah. And also the, checklist is a system in and of itself that takes a lot of the guesswork out of it. And also, you mentioned Asana. We use that quite a bit as well. I recommend that for everybody, is, coordinating with partners outside the company, in the company, any partners you have, even legal and management. It's just, it allows for a more seamless and also, what's the word I'm looking for? It's very, you can just see what other people are working on.
Yeah. Yeah. How, may I ask you a question? Did you have any resistance from your partners, outside partners, to kind of get on there and start using that? Because that's the challenge I've had a little bit, that they've always done it one way, so now they're going to start doing it a different way.
Yeah, I would say, it's funny, some partners have been all about it and dive right into it, and maybe even more active than I am in it. But then I have others that are, active day one, and then don't ever, fill it out, or don't fill it out as much as they maybe should be.
Mm-hmm.
So I think it takes a little bit of education, maybe a little bit of nudging sometimes, but I think if they see the real benefit in it, then it can be powerful.
Yeah, makes sense.
So sounds like you've got quite a bit of growth lately, a lot going on. What to you, with everything going on, we talked about COVID briefly. What, with everything going on in the world, will you see coming out of this as a positive for real estate or multifamily investing? Or opportunity, I should say.
Yeah, I mean, I still think that multifamily is going to be a space that, that's going to still attract a lot of money just because it's, everybody needs a place to live, right? I think, well, this is my opinion, but I think there could still be some operators that's going to get into trouble as we move through this, that they're not well capitalized in case, the unemployment benefits and other things start to run out and people then can't pay rent. I mean, so far everything's been fine, but there could be some challenges there. So I think, just continue to have money in the bank so you can cover any shortfalls, and then stay in touch with your brokers and your bankers and your lenders and everybody, and see, do they start hearing about some deals that are starting to get a little bit distressed, somebody that needs some help, and see if there's a way to help out and see an opportunity in that, right? So I don't know what the future looks like. I think the positive that's come out of everything is really, I think we're learning a lot more about how we can use systems, remote leasing, remote management to manage these deals, right? So maybe we can create much more efficient ways of operating our business in the future, because we may not need on-site leasing staff. We may not need, physical tours and all those things. I think we can optimize our businesses that way by using some of those new technologies that can help us a lot.
And segue onto that, as far as, everything you've been able to accomplish, what keeps motivating you to keep going every day?
Just personal growth, really. I think there's, somebody, what do you like about real estate? And I think the best answer I've found is I like the people that I get an opportunity to associate with, to learn from, to grow with. And, having been in IT, I always, I'd go to IT conferences. I was like, oh, I hate this because I don't want to hang out with all these nerds. I was one myself, but now I go to a conference, a real estate conference, they're like, man, this is awesome. And because everybody is passionate about their future, they're passionate about, doing deals, making money, helping the community. So that just creates this energy that I really love being a part of. And just there's so many innovative people and so many people doing amazing things that I can learn from. So really, what keeps me going is keep growing, keep learning, keep associating with people that are doing amazing things, right? And we all have different abilities to help each other, and I really love that, just that personal growth. So that's what keeps me going.
Yeah, I couldn't agree more. I think that's something that's really, really fascinating and contagious about the energy of people in the industry of both multifamily, just entrepreneurship in general. You go to these conferences, you're right, it's got this buzz about it because everybody's just excited to learn, excited to help each other. You're always, if you ask somebody a question, 99 times out of 100, they're going to help you, and they want to help you, and they want to be of service to you. And it is contagious to be around that energy.
Absolutely.
As far as what you see as what has worked for you the best as far as multifamily investing, would you have any advice for our listeners there?
Yeah, so we've taken a couple of different approaches. The stuff, personal portfolio, and also that first 38 unit has been more of a heavier value add deals, right? Going in there and taking a distressed asset, putting money into it and improving it. I think in the long run that's going to work out really well. It's been a little bit painful in the beginning because you're putting a lot of money in and you're not seeing the returns very quickly. But then we create a good asset that will, be very high quality for the next 10, 15, 20 years, however long you want to hang on to it, right? So that's one strategy. But I wouldn't recommend that if you're a newbie, or if you don't have a strong team behind you, or if you're trying to do it as a syndication, because your returns are going to be a little bit unpredictable. We learned some painful lessons there in terms of, plumbing. We had to redo the floors and all this stuff, right? But I think you can create some amazing value because you're not chasing the same deal that everybody else is chasing, right? So that works on the smaller deals. On the larger stuff, it's basically like everybody else trying to find that value add deal, that C or B minus B property that has some upside to it through some capital improvements and just do better management. And I really also like, I've been in a couple of different markets. I'm really focusing for the larger deals actually in that upper Midwest, just because the cash flow is so strong and we can go in and buy deals at reasonable cap rates and get good cash flow. Maybe the appreciation is slower, but something that can cash flow 8 or 9% out of the gate, that's pretty amazing, right? So, even the latest deal we're doing, because we had put so much money into reserves, we don't really have a lot of capital for rehab the first year, but we are like, hey, if you just run it the way it is with no increase, they'll still return 8%. So so there's a lot of upside there once we get all our reserves back and can start really doing a lot more improvements. So that's kind of my philosophy, and then everybody does it differently, but it just works for me. So
yeah, that's great advice. As far as one time where you've had a failure, and could you dive into that and lessons learned from that failure?
And I think so. I think I want to maybe talk about just like passive investments that I've done. I've done a couple of passive investments into some deals that I didn't understand, and it got me in trouble because it's like, the returns look amazing. I didn't really understand. One was a second lien on a single family home in California. Somebody was tearing something down and building, a $20 million house, whatever much it was. And I put some money into that, and I didn't really understand what that looked like. I didn't realize, hey, we're in the second liens position, so we don't really have any recourse if it goes sideways.
Yeah.
And so that cost some money, and really, I got greedy and I didn't really understand what I was doing. So that was one thing. The other thing was an agriculture investment in Central America, doing something again, didn't really understand. It all looked good, and I haven't lost the money. I haven't made any yet. I don't know where that's going to go. But I think the bottom line here is invest in something you understand.
Yeah.
I mean, you always don't want to put all your money into real estate, but the same thing with the stock market. Everybody puts money into the stock market. They don't understand anything about what's going on, and then it goes sideways and up and down, and for no apparent reason, right? So at least I know now that the deals I'm in, if they're not doing well, I know why, and I am learning from that. And so I think that's been my biggest lesson there.
Yeah, that's really great advice for our listeners, because I couldn't agree with you more. I think that you should have a good grasp of what you're doing and what you're investing in, even if it's passive, because you want to know what's going on in a deal. You want to know where the opportunity is, where the value is, where the potential downside is, what the risk is, and trust the partners that are involved, and have trust that they can do what they say they're going to do. And if something does go sideways, they'll do their best to figure out the best solution. Well, let's jump into our monumental questions.
Sounds good.
Let's do it. What does success mean to you?
Really, it's just personal growth, right? You live up to your potential, and you're a better version of yourself every day. So you keep growing, keep learning. Just there's no limit to it. And my partner, who's 77 years old, is like, yeah, I'm running out of time. I love this stuff, and he's just every day out there doing new stuff, doing deals, and I want to be in the same shoes. So just learning and growing. That's most important to me.
Yeah, I love it. What about daily habit or morning rituals that you have?
Yeah, so get up 5 a.m. and do some exercise, do some reviewing my goals, do some journaling. Got my journal right here. Can't see it, but kind of that, and either do some reading or some writing, and just spend, an hour and a half, just really focusing on stuff that's important for me in my growth that tend to get lost in the hustle and bustle later in the day. So that's my daily routine.
Yeah, that sounds similar to mine. And what about favorite habit or favorite book or book you're currently reading?
Yeah, so I'm actually reading. So I recently started. I don't know if you can see this. It kind of goes away, but it's it's not so odd. The High Performance Habits by Brendon Burchard. I recently started working with a coach, high performance coach, and just the principles in there are amazing. And it's literally, been doing this for a couple of months, and it's really further improve my life and change my habits. So the High Performance Habits by Brendon Burchard. That's what I'm reading right now. It's pretty amazing. So.
That's great. Yeah, I haven't read that one, but I've heard a lot of people recommend it. So adding it to the list.
Right.
I love it. Well, Jens, this was a phenomenal episode. I first want to thank you for coming on. Loved hearing your story, your background, and how you got to where you are today. And thank you for sharing that. And how can our Monumental listeners follow you, connect with you, or reach out to you?
Yeah, so they can reach me at opendoorscapital.com. My email is Jens, Jens, at opendoors with an S, capital.com. And anybody that wants to get on a strategy call, they can go to opendoorscapital.com/call. And I want to share that checklist, that syndication checklist. If you can put it in a show note, I'll send it to you, because that's just a document I put together, and anybody that's interested can just get my Google sheet of that, and maybe there's some value in that for some of your listeners. So I'd love to share that.
Yeah, definitely. We'll definitely put that in the show notes. And then also for everybody listening, if you enjoyed today's episode, make sure to share it on social media, tag Jens, tag myself, tag Open Doors. Let us know you're listening. And also, if you enjoyed today's episode, make sure to leave us a review on iTunes or wherever you're listening. And with that, have a monumental day.